Okay, this is Isaac from Trade Simple, Trade Smart, and I'm going to go through our trading approach, putting it together, giving examples of how we put the various components and make them work collectively to identify areas of confluence. Now remember, we're looking for trend identification and understanding what the smart money cycle is doing. We're looking for deep liquidity pools where we expect smart money to turn up. We're also looking for areas of confluence, which are the places where smart money is most likely to turn up. They're not the only places where they turn up, but the places where we keep a constant focus on. Then we're going to look at identification of market manipulation, having evidence that market manipulation has actually taken place, which is very important. Then finally, trade management. Do you go for 20 pips, do you go for 200 pips? That aspect of managing the trade as well, right, which is just as effective as the entry and the risk management aspect. So let's put this together. This is a pound versus dollar. This is over a 2-week period. This represents some opportunities that took place that we would have traded. So most of them we did, some we didn't, but nonetheless the whole point is not to necessarily trade every single setup, because there are a few key criteria that need to take place towards the end part of the setup. So if they took place, then we will take them. If they didn't, then we simply wouldn't. All right, but to give you an example, let's look through here. The first opportunity is around this zone here. So each of these zones represents a trading opportunity. Now, first of all, what we notice is that looking at the market conditions here, we're generally sideways, and we had a shift off this level here, which is previous level of support, which becomes a demand level. And looking into how we came into this zone, we can see we have an ABC retracement here. We've got an 886 retracement of this swing low. We've also got previous level of support. We've got a demand zone. So this is a place where we want to watch quite carefully. We've also had evidence of manipulation here. So this becomes a high probability trading zone. Now there are numerous ways of trading this. We can either trade the impulse or the retracement as it comes back into it. Either way, this we would have been watching quite carefully, and we were watching pretty carefully. Looking at how price came into it, you'd look at the way price action comes into it, how it shifts off it, to determine whether we have a genuine trading opportunity. But this zone would have been watching. So here was the first opportunity there. We can see from here we went to the previous highs around there. So initial trade management would have been to previous highs first, and then look to see if we can continue to the former highs here. That didn't happen. So what happened is price took off from here, pulled back, and went further up into a second zone. We were looking for possible shorts. So we were looking for a long from here and looking for a short from here. Now here's a confluence around here. We have several things. We've got previous high. We've got general sideways consolidation, which is overall accumulation. We've got a nice AB equals CD pattern. We've got another large AB equals CD pattern here. So this zone, we were looking for an area between this high point and this high point, so between this range here, which is about a 30 pip range. As soon as we get evidence of market manipulation, then we take a trade, and we can see here the shorting opportunity worked out quite nicely. Price fell like a stone into another level of accumulation, which we can see taking place here. So at this stage there was no particular trading opportunity, nothing of immediate clarity, so we just simply wait. Okay, there's no point trying to pick every single entry and trying to define which way the market's turning until you have absolute clarity. So the moment we have clarity, like we did here and here, we execute a trade. The moment we don't, we simply wait on the sidelines or look at another currency pair. So what happened after that time is the next opportunity was up here, and the confluence at this stage was this. We have previous manipulation point, previous level of deep liquidity here. We have also a nice ABCD pattern into this. We've had a shift off this level and general slowing down. So we're looking at this zone as an area of confluence, plus a couple of other factors. But putting that together, we can see there's a higher probability of smart money coming in to short the market here. And there were various ways of entering it. Price pulled up, fell and then pulled back up again to give a double top. You have an opportunity to enter here. So we have a final part of the jigsaw which is looking for a double top formation, and lo and behold, that caused price to fall quite heavily. Okay, then the next opportunity we had was of these lows here. Why? Because price has come all the way down. We identify now we're in accumulation, so smart money is accumulating orders during this point in time, and we then form a directional bias. In this case it was a long of the lows, and we can see we had manipulation of these lows, which is also a level of support, I guess, an area of liquidity of accumulation on the back of smart money having moved the price down, where we're looking for potential reversal, which we got here. Okay, so there was a long opportunity, and lo and behold, evidence of smart money coming in is the momentum with which price moves up. It moved up pretty aggressively to the next level, which is these previous highs. Okay, that led us to the next couple of opportunities were both long trades. So from this month onwards, we were only interested in longs, and we had an opportunity to go long here based on an intraday manipulation and intraday confluence factors. That shot up. Then we had another opportunity here, although this traded outside of our normal range, so we wouldn't have normally have taken this. This was during the Asian session, but those people who trade late New York, early Asian session would have been able to take this opportunity. And what we have here is simply this pattern here, an ABC correction off the back of an upward trend, and we have evidence of manipulation. There is some level of liquidity around here, more for intraday rather than position trading, but nonetheless it still gives a decent push up. Right, the final opportunity I have here, and a couple of more, but the main one was up here. We were looking for a short opportunity on the back of this move here, and then understanding where we are in a smart money cycle helps. We understood that from this point smart money was looking for shorts. So what happened is we had a nice high point form, manipulation of the highs, and price fell quite aggressively. That was the first opportunity. There was another opportunity to get in this dominant move here also, another manipulation point there which provided liquidity from an intraday trading perspective. That took place, that gave two shorts. Then we had sideways movement, which is accumulation, and at this moment in time we were looking for an opportunity long, which we got at this stage here, looking for an intraday push up, which retraced. So depending on how you manage your trade, you would have either made a profit or broken even, or possibly taken a loss, depending on how you manage your trade here. But that highlights the main opportunities that took place. I mean, there have been others since then, but I thought that gives an idea of how we put Confluence together.